All right, so I decided to transfer over my investments from Investor's Edge to Questrade. I already made the request, which is actually pretty simple. In Questrade, you just simply go to Accounts, then you go to Funding, and then Transfer Account to Questrade. Transfer Account to Questrade, click it, choose the account to which you want to transfer to, and then just fill out the information. It's pretty simple. Takes 10 to 20 business days. And it says here, if you're transferring 25,000 or more, Questrade will rebate you the fees up to $150 per account. So for example, if CIBC is charging me fees and I'm transferring over 25,000, then Questrade will reimburse me. I'm actually not transferring 25,000. I'm transferring about 15,000, but Questrade has a promotion right now where they're going to transfer the fees up to $150 regardless of the amount that you're transferring, as long as you show proof of the fee. And with Investor's Edge, they will be charging me $130 to transfer. I'm actually just transferring the Tfsa, so my Investor's Edge Tfsa to Questrade Tfsa. Now, not transferring because CIBC is bad or anything. I actually like CIBC. Service is great. Fees are great. In fact, some of their fees, for some transactions, their fees are cheaper than Questrade. But the main reason I'm transferring my Tfsa to Questrade is for this reason, the margin account. So with Questrade, you can actually increase your buying power in the margin account with your Tfsa. But in other accounts or with other brokerages, like CIBC for example, they don't link your margin account to your Tfsa. So the buying power in your margin account relates to or depends on the cash amount in your margin account. So if you put $1,000 in your margin account, your buying power is about $3,000. So you can borrow an extra $2,000. But with Questrade, if you put $1,000 in your margin account, but you have $10,000 of investments in your Tfsa, your buying power could be around $45,000 of buying power. And I think actually in my margin account, I've used up $42,000. So I actually borrowed $42,000 equivalent in Canadian from Questrade, but my equity in my margin account is $8,000. So $8,000 is what's actually mine. $42,000 is what I borrowed, and I was able to borrow this much because of the $8,000, but also because of my Tfsa, because of the market value or the equity in my Tfsa. And I still have some margin power, and I still have some buying power remaining in my margin account, 4,700. But I've got a lot of positions, as you can see here in my trading, in my margin account. Some are positive, some are losing, but most of them are positive. And as soon as I sell them, then the borrowed amount goes down. And my biggest losers right now are Apple, I'm down 14%, Nvidia, I'm down 8%, Kraft Heinz, I'm down 6%, Qualcomm, I'm down 5%, ExxonMobil, I'm down 4%. So they're very big names, so nothing to worry about, but they're just bad timing. So the main reason that I transferred my CIBC's Investor's Edge Tfsa to Questrade is to increase my buying power in the margin account. And also, it feels simpler to have everything in one place. I've got nothing against Investor's Edge, so it's nothing. It has nothing to do with Investor's Edge. It's just that I felt it would be easier to have everything in one place, especially for the Tfsa, and also to take advantage of increased buying power in the margin account as well. Since I rarely buy over 700 shares, transaction fees are going to be cheaper for me with Questrade when I buy stocks. So $5 versus $7. But sometimes, of course, $7 fixed is better than Questrade depending on the number of shares you're buying. But at the end of the day, $2 or $5 per trade is not going to make a big difference for me. As long as I'm profitable on every trade, I'm not going to care. So now the advantage of increasing your buying power using your Tfsa is that you can contribute to your Tfsa, use the tax-free advantage of the Tfsa, so grow your portfolio tax-free, and at the same time use that as collateral or leverage to increase your buying power or your borrowing power in your margin account to buy other stocks. But with any other brokerage, I would have to contribute to my margin account if I want to increase my buying power in my margin account. So I actually think this is a really big advantage, because you take advantage, because you're able to benefit from the tax-free aspect of the Tfsa while borrowing money at the same time. But of course, by doing that, your Tfsa becomes sort of a collateral. So if, of course, my trades were to lose, let's say 60% in value, I'd be placed in a margin I'd be placing a margin call, and they would ask me to fund the account, the margin account, of course, to make up for the negative balance. And if I'm not able to, then they're going to sell my shares in my Tfsa. So they might force liquidate my shares in my Tfsa in order to compensate for a negative balance in my margin account. So that's obviously the risk with it. But assuming I keep the same strategy in my margin account as in my registered accounts, I shouldn't have to worry about that. I mean, I've got some big names in my account. Now, Questrade, of course, charges between 8 and 9% interest per year on the borrowed money. So I don't plan on holding stocks that pay dividends in this account. I don't plan on holding stocks long term, because if a stock pays 5% dividends and I'm paying 9% interest rate, if I'm paying 9% interest on that, then I'm paying interest upfront just to collect potential capital gain in the future. So it's not something I want to do. So the way I would trade in my margin account is mostly going to be swing trading, or trying to generate some capital gains, buying low and selling a little bit higher. So Apple, for example, as soon as it hits 200 or a little bit over 200, I would sell. Nvidia, same thing. Kraft Heinz, probably around 60 maybe I would sell. Qualcomm around 59 I would sell. ExxonMobil around 82. Bombardier, I'm probably going to keep to sell call options, or to write covered calls, because it pays almost 5% per month when selling call options against it. United States Steel, same thing. I'm going to try to keep as long as I can in order to generate 2 to 3% per month from that, as much as I can. Vermilion Energy, I'm going to sell for capital gain, but while I'm holding on to it, it pays about 9% dividends, I believe. So right now, without doing anything, it's paying my interest. Macy's, I'm going to hold on to it as long as I can to write covered calls on it as well. Make maybe 2% per month, and eventually sell at a capital gain. JP Morgan Chase will be for a capital gain, but don't know how long it'll take for it to go back up. Intel will be for covered calls. Dollarama will be for capital gains. Blackstone will be for a capital gain. BMO will be for capital gain. But of course, while I'm waiting, I'm collecting dividends. Barclays, not sure yet what I'm going to do with Barclays, either call options or capital gain. Not sure yet. CIX, I made a mistake with this by choosing the wrong strike price when writing covered calls. So looks like I'm going to have to let it go next month. TransCanada will be for capital gains as well, and while I'm holding on to it, I'm collecting dividends. So I'm already up close to 10% on this stock, so I could probably look to sell it. I think I have a selling order at 57 TRP, yeah, 57. So although it pays 5% dividends per year and it's got good growth potential, but because it's in my margin account, I don't want to hold it long term. So I just want to take a 10% profit, and I've probably held it for 3 months maybe. So I paid maybe 2 or 3% interest in those 3 months, but I made a 10% profit. Snapchat, I sold a 2-year call option against it. So I already collected 30% of it. So 15% per year, plus I'm paying, so deduct from that 9% interest. So even if I'm holding on to it for 2 years, I'm still profitable on it. And my strike price was $7. So in 2 years, if it's trading above $7, it's going to sell automatically. If not, I'm going to keep the shares, and I already collected 30% upfront by selling a 2-year call option on Snapchat. Micron, well, if you saw my video on Micron, you know how disappointed I am, but I sold call option on that, collected about 2.6% already, and the strike price I chose was 36. So it looks like it's going to be above 36 by expiry date, so my shares will get called away automatically. I'll be making an extra 6% from the shares, but this stock was trading at $39 last week, so pretty disappointed. I would have, if I had not sold the covered calls, I would have made 16% in capital gains if I had just bought and sold the shares. But I probably would not have kept it till 39. I probably would have sold at 37 and just made my 10% in a matter of 2 or 3 days. GE as well, I think I'm keeping for covered calls. American Airlines, same mistake as CIX. I sold call options at a 31 strike price, and look, it's trading at 36. So I'm up 17%, but I can't take advantage of that because of the call option that I sold. So that's disappointing. Up $529. And Groupon, I'm selling covered calls on, making almost 3% per month on Groupon. But I chose a $3.50 strike price. So if ever my shares get called away, I'd still be making a profit from selling the shares of 350 divided by 290 of 20%. So if my shares get called away, I'm making 20%, and every month I'm keeping it, I'm making about 3%. So that's my strategy with my margin account, and basically that's why I transferred over my Tfsa from Cibc's Investor's Edge to Questrade, just to take advantage of increased buying power in the margin account. And also I've got Kraft Heinz in my Tfsa at Investor's Edge, and I've got some Kraft Heinz here, so I don't like having the same stock in different accounts. I'd rather group them together for the fees, of course, but also if I can reach 100 of a particular stock, then I can sell call options or write covered calls against them. Same thing for GE. I've got some GE shares in Cibc, so when they get transferred over to my Tfsa, I can combine them. So I just wanted to share with you the fact that I'm transferring over my account to Questrade. If you have any questions or comments, leave them in the comment section below. As always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. If not, you could get $50 in free trades if you use my referral link below. So it's your choice. Also check out the other referral links in the description below the video to help support the channel. Thanks for watching.